Well, okay, let's really get into this. Imagine you're deep in the trenches, running a business,
Yep.
maybe building homes, maybe crafting software, whatever it is. But chances are you're also kind of the default treasurer,
hmm
juggling payroll, supplier invoices, chasing payments, and somehow trying to make the cash flow right. It feels like, well, blunt instruments sometimes, moving money and data between totally separate systems.
That feeling is absolutely universal, yeah. And the sources we looked at, they make that abundantly clear. You've got your bank portal here,
Right.
your accounting or ERP system over there, maybe a separate payroll thing somewhere else.
Totally separate worlds.
Exactly. And getting them to talk. Often, that's manual exports, imports, painstaking data reconciliation.
Mm.
And it's for businesses of any size. Small bakery, huge corporation, doesn't matter. Stitching it all together is just this major time-consuming headache. It's like our processes are stuck in the past, batch processing. But business needs real-time speed now.
It completely pulls you away from what you actually do, the thing you built the business for in the first place. And that friction, that inefficiency in just the mechanics of money and data, yeah, that's the real problem we're unpacking in this deep dive.
And that brings us right to the topic. We've gone through a stack of sources, articles, videos, the whole lot, all centered around this idea called embedded finance.
Okay.
And while it's broad, we're going to focus quite a bit today on B2B payments, where it could be a real game changer, but we'll definitely touch on the wider picture too.
So our mission today is basically to give you the shortcut. We're pulling out the most important stuff from this material, figuring out what embedded finance actually is, why everyone's talking about it, and, well, where it's headed. Think of it like a fundamental rethink of how financial services get delivered. Instead of you going to the bank or some money app,
Right.
the finance is sort of woven into the platforms and things you're already using every day. The sources often call it contextual banking.
Exactly, contextual banking.
Mhm.
It brings the finance to where you are in the context of what you're doing. It's shifting finance from being a destination
Yeah, somewhere you have to go.
to being just an integrated capability. It's just there when you need it. Now, picking up on those business frustrations you mentioned,
Is it ethics?
the sources really hammer home how big these challenges are. They detail the struggle companies have just getting their main bank accounts properly linked up with their accounting or ERP systems.
ERP, right? Enterprise Resource Planning, those big company-wide software systems. And yeah, getting them to play nice with banks, historically tricky.
Right. So you've got this core system, but managing cash flow, paying suppliers, handling payroll often means hopping out to different
Or
apps.
silos.
And the reconciliation part, oh man. The sources describe it as almost universally painful. Whether you're small, manually matching receipts, or a big corporate treasury team dealing with complex data feeds,
It's a mess.
pulling that data together reliably, closing the books, it's just a massive drain on time and resources.
It really struck me reading through this stuff, how often they contrast it with our personal lives. I mean, on our phones, right? Splitting bills instantly, buying stuff with a tab, tracking budgets. It's easy.
Yeah, seamless.
So why should managing money for your business feel like, I don't know, using a fax machine?
Mhm.
The core idea seems to be bringing that consumer-grade experience, that ease, that intuition into corporate payments.
That's a key point because, the people managing corporate payments, they're just people.
Right. Humans.
They deserve human-centered design, not these clunky, separate systems.
Okay, so let's define it then. What exactly is embedded finance, according to these sources?
So the core definition is the seamless integration of financial services. And that means payments, sure, but also things like lending, insurance, even wealth management tools, embedding them directly into non-financial platforms.
Non-financial. Okay, so like into the apps and digital journeys people are already using.
Exactly. Finance becomes a built-in function, not a separate destination.
And that really highlights that contextual banking idea. Again, delivering the service right at the moment, right in the workflow, where it just makes sense. You don't stop doing your thing to go find the bank. The bank or the financial function kind of comes to you, embedded right there.
It's a pretty radical shift from how things used to work, Traditionally, you had to actively go find a bank branch or even just open up your banking app.
Right, it was a separate step.
Now the financial capability is just there, a smooth, integrated part of whatever you're doing. The sources talk about an enhanced user experience, services available wherever they are and whenever they need it.
And I think the deeper idea here that really came through is that financial services usually aren't the end goal,
No,
right?
no, they're a means to an end.
Exactly. You don't get a loan just to have debt. You get it to buy the house, fund the business expansion, pay for college. Embedded finance kind of shifts the focus onto making that ultimate goal happen easily. The money part becomes almost invisible or just effortless.
Okay, so how does this actually work? What's under the hood, technically speaking?
Yeah, the nuts and bolts.
Well, the sources detail the infrastructure. It needs deep integration with existing business platforms, the accounting systems, those ERPs you mentioned, procure-to-pay systems for buying stuff and paying invoices.
In order to cash for getting paid.
Right. And the key technology enabling all this, APIs, application programming interfaces.
Okay, explain APIs simply, like
Okay.
translators.
Pretty much. Think of them as standardized ways for different software systems to talk to each other securely. One platform can ask another to do something like, hey, initiate this payment or send me this specific data.
Got it.
And banks are really jumping on this API-first approach now, partly pushed by regulations like PSD2 over in Europe and the UK, that's the Payment Services Directive too, encouraging more open access, more data sharing.
Okay, APIs let systems ask each other for things. What about webhooks? The sources mentioned those too.
Right, webhooks are similar, but kind of the reverse. Instead of one system asking, a webhook lets a system push information automatically. Ah, so like a notification.
Exactly. If a payment status changes or maybe a loan gets approved, the financial service provider system can use a webhook to instantly tell the main platform, hey, this happened. It's crucial for making things feel real time.
Makes sense. And there's other tech involved too, right? Like location data, IoT.
Yeah, the sources mentioned those. Geolocation for context-aware offers. IoT, the Internet of Things, enables stuff like paying for fuel directly from your car. And AI, machine learning, of course, for predicting needs, personalizing offers, assessing risk.
And the actual payment methods being embedded. Standard stuff like ACH, wires.
Yep, ACH, EFT, wires, and increasingly real-time payment networks. But one thing getting a lot of attention and investment, especially in B2B, is virtual cards.
Ah, yes. Virtual cards. Explain those again. They're like one-time use numbers.
Essentially, yes. They create a unique 16-digit card number, a PAN, primary account number, often just for a single transaction or a specific purpose. But the real magic, particularly for businesses,
The data part. Exactly. It's how they link the payment and the data. When a buyer pays a supplier using a virtual card issued just for that invoice.
all the info travels with the payment.
Right. Invoice number, amount, whatever's relevant, it can be embedded right in the transaction data that goes to the supplier along with the money.
Which solves or helps solve that massive reconciliation headache we started with.
Precisely. The supplier gets paid, and they get the data they need to automatically match it up. Boom. Loop closed.
That simultaneous payment and data transfer,
Hmm.
that seems huge for fixing those back office pains.
It's a key piece of the puzzle, definitely. Solving those reconciliation nightmares we talked about.
Okay, so we see how it works. What does this embedded world actually do for people, for businesses? What are the big benefits and use cases?
Well, the sources lay out a pretty compelling case. For the businesses, the platforms doing the embedding, it's a huge opportunity.
How so? New revenue.
Definitely new revenue streams. They can take a small fee from the payments, maybe a percentage of the loan interest, or commissions on insurance sold through their platform.
But it's more than just money. It deepens customer relationships. It differentiates them from competitors who don't offer this, builds loyalty.
Any numbers on that?
Yeah, the sources cited some pretty striking metrics, especially from retail examples. Platforms embedding finance saw things like a 12% jump in conversion rates, a 30% increase in average order value, and like a 7% overall revenue lift. Plus, better user engagement, better retention. It becomes a real win for the platform offering more value.
Okay, so that's the platform side. What about for me, the user, whether I'm shopping online or using some business software?
For you, the user, the benefits are massive. First off, just sheer convenience. You don't have to jump out of what you're doing.
Less friction.
Way less friction, a
Yeah.
streamlined experience. Then there's personalization. The platform can use what it knows about you, your context, your behavior within that platform, to offer tailored financial help.
Right, relevant offers. Exactly. You get flexibility, control, access to help right when you need it. It just makes the whole experience better because you stay focused on your main goal, booking a flight, managing expenses, whatever, not wrestling with the finance part. It's definitely a win for the end user.
Can we make this more concrete? What are some real-world industry examples the sources highlighted?
Oh yeah, plenty. Retail and e-commerce is the obvious one. Buy now, pay later, BNPL, that's classic embedded
Like
finance.
Klarna or Afterpay right at checkout.
Exactly. But also embedded warranties, one source mentioned Akko partnering with Amazon for extended warranties. Integrated payments, cashback offers, loyalty programs tied to how you pay,
Yeah.
all embedded.
I saw a stat mentioned it's something that how many people expect this now.
Yeah, pretty remarkable. One source claimed 40% of consumers, and get this, half of young adults would only choose brands offering BNPL or similar fintech features.
Wow. Loyalty driver right there.
For sure. And the Amazon CI co-branded card in India was cited as a huge success. 51 million cards, user spending 1.2 times the average, embedding finance right into that massive Amazon customer base.
Okay, what about B2B payments? Where does it show up there?
Embedding payment capabilities directly into those ERPs, accounting software, procure-to-pay systems.
For things like paying invoices automatically.
Right. Automated invoice payments, smoother payroll, better expense management, and virtual cards, like we discussed, are getting huge traction there, especially for T&E travel and expenses and paying suppliers, mainly for those reconciliation benefits.
Makes sense. Any other industries?
Automotive is another one. Imagine paying for fuel or tolls right from your car's dashboard.
Like automatically linked.
Yeah, or getting financing or insurance offers based on your actual driving data from the car's sensors.
Interesting. Healthcare?
Yep. Embedding patient financing options into hospital portals, linking data from your fitness tracker or wearable.
To your health savings account.
Right, your HSA, or maybe insurance for easier claims or wellness rewards. Just streamlining billing generally makes the patient experience way less painful.
I remember one use case mentioned that seemed surprising. Education.
Yeah, that jumped out at me too. Specifically, universities using virtual cards to pay their suppliers. Again, it highlights that the data and reconciliation benefits are solving real back office problems, not just consumer stuff.
And travel. Online travel agencies.
Big use case there too. OTAs using virtual cards to pay hotels and airlines. It's another B2B flow where embedding the payment with the data just makes operations smoother for everyone.
Okay, so it's a win for the platform, a win for the user.
Right.
What about the banks? The traditional financial institutions actually providing these services. Is it a win for them too?
The sources argue, yes, it's definitely a win for them too, the manufacturers of these services.
Don't they lose direct customer contact?
They might lose some direct contact, but they gain access to potentially vast new customer segments via these platform partnerships. They can scale up way faster and cheaper than trying to acquire every customer directly through branches or marketing campaigns.
So they become like an infrastructure provider.
Exactly, an enabling technology. They get access to huge new distribution pools they couldn't easily reach on their own. So win-win-win. Platform, user, manufacturer.
The sources also spent some time specifically on India. That seemed like a really big focus area.
Oh, absolutely. It's presented as just a massive opportunity. The projections are staggering, potentially $400 billion in value creation from embedded fintech in India by 2030.
Wow, $400 billion.
Yeah. And they estimate it could touch around 450 million consumers by then.
Yeah.
That creates huge revenue pools, like $10–15 billion, and big opportunities for the infrastructure side too, maybe $5–7 billion.
What makes India such fertile ground for this, according to the sources?
It seems to be a combination of factors. First, the sheer reach of consumer platforms there, messaging apps, e-commerce giants, ride-hailing apps. They have hundreds of millions of users.
Okay, massive user base.
Second, high engagement. People spend a lot of time on these apps daily. Third, growing trust in these digital platforms. And crucially, fourth, access to really valuable proprietary data.
Like what kind of data?
Browsing habits, purchase history, payment preferences, all collected within the app. That data is gold for creating relevant, contextual financial offers.
So it really sets up that win-win-win scenario perfectly.
Exactly. Platform gets revenue and loyalty, user gets convenience and good offers, financial partner gets massive scale. We see examples already, like Ola postpaid a credit line right in the Ride app.
Make My Trip has something too.
Yeah, Trip Money for Forex within the travel booking. Spinny Capital for car financing embedded in the used car platform. Those Akko Amazon insurance partnerships we mentioned. PhonePe doing motor insurance.
It leads to that idea one source mentioned, hidden fintech unicorns.
Right. The potential for these huge consumer platforms that you don't think of as banks to quietly become major players in financial services, all within their own ecosystems.
Okay, this all sounds incredibly promising, almost inevitable, but it can't be that easy, right? What are the roadblocks? the challenges?
No, it's definitely not all smooth sailing. The sources were very clear about the challenges, the blockers, as they call them.
Like what are the big ones?
Well, a major one is just getting traditional financial institutions to fully adapt. They need to really embrace APIs, banking as a service models.
Move beyond legacy systems.
Exactly. Get rid of those old batch processing systems, move to real-time tech stacks. And they need to fundamentally shift their mindset, see fintechs and tech platforms as partners, as distribution channels, not just competitors.
That's a big cultural shift for some banks.
Huge. And in some markets, just digitizing cash and checks is still a hurdle itself.
What else? Partnerships.
Partnerships are critical, but also complex. You need really strong, trusting relationships. It's not just buying a service. It's often co-creating something new. Requires collaboration between the corporate, the bank, the fintech, the tech platform. Managing all those relationships is key.
I can see that getting complicated fast. Fraud must be a concern too.
Big time. When you have multiple parties involved, sharing data, moving money, it creates new vectors for fraud. You need really sophisticated detection, strong authentication, encryption, real-time monitoring that works across all the different systems.
And who's responsible when something goes wrong? That sounds tricky.
That ties into the next blocker, regulatory compliance. It's a complex maze.
Yeah.
Different rules in different places, different rules for payments versus lending versus insurance.
And embedding them blurs the lines.
Exactly. Who's responsible for KYC? Who holds the license? There's often ambiguity. Regulators are playing catch-up, trying to figure out how to apply old rules or create new frameworks that are flexible enough.
Okay, regulation is tough. What about risks from the partners themselves?
Partner-associated risk, yeah. Your platform's reputation could take a hit if an embedded partner acts unethically or messes up badly.
Oof.
So you need serious due diligence before partnering, ongoing monitoring, really solid contracts, and importantly, clear exit strategies if things go south.
And finally, just the tech itself must be complex.
Absolutely. Making the data flow seamlessly between all these different systems, ensuring a consistent user experience, even if different partners provide different services, keeping performance snappy, it's non-trivial.
Like deciding instantly if someone gets credit.
Right, that real-time eligibility thing. You need speed, but it also has to be fair and accurate. And just designing the interface, how do you offer multiple embedded options without completely overwhelming the user? The sources really stress that the underlying infrastructure, the technical piping, is make or break for these partnerships.
Okay, so lots of potential, but also significant hurdles. Factoring all that in, where does it seem to be heading? What's the future outlook?
Well, technology will keep driving it forward. AI and machine learning will get even better at prediction, personalization, risk assessment. IoT will enable more context-aware services from smart devices.
Blockchain, CBDCs.
Blockchain might play a role in security, transparency, maybe smart contracts for automated financial agreements. CBDCs, central bank digital currencies, and maybe even bits of DeFi, decentralized finance, could influence the rails things run on or how services are accessed down the line.
And the market size. You mentioned huge numbers earlier.
The projections are massive. Globally, some see embedded finance revenues hitting $7 trillion by 2030. We'll see it expand more into emerging markets, a big driver for financial inclusion, and into new industries we haven't even talked much about, like edtech, agritech, professional services.
Even the metaverse.
Potentially, yeah. Embedded finance experiences in virtual reality. Why not?
Yeah, and regulation will have to keep evolving alongside all this.
Inevitably. Regulators are learning, focusing on consumer protection, stability, competition. We'll likely see more international coordination, maybe more standardization. Regulatory sandboxes will probably remain important for testing innovations safely.
So the sources kind of paint this picture of a potential future as sort of utopia.
Yeah, where finance truly meets you wherever you are. No need to go find it.
Payments become almost invisible, like paying for an Uber.
Exactly. It just happens. And businesses can finally ditch the tedious payment runs and focus on strategy, cash flow management, capital allocation.
It's about building things based on human-centered design, right? Understanding the actual job someone's trying to do.
Not just digitizing old, clunky processes. Rethinking why someone is, say, copying data from one spreadsheet to another and solving that. Moving beyond fixing pain points to fundamentally redesigning the financial parts of life and work.
Okay, so wrapping up this deep dive. Embedded finance. Clearly powerful, transformative. It solves real problems for businesses, for individuals, unlocks huge opportunities.
But definitely comes with challenges, technical, regulatory, partnership-wise, that need careful handling and collaboration.
It's this profound shift, isn't it? From finance as a separate thing you do.
To finance as just an integrated capability right there in the flow of everything else.
Right. So if we think about that potential future, invisible payments, finance just seamlessly helping you achieve your goals. Here's a final thought for you to take away. If the why behind your financial actions, buying the house, running the business, getting the education, becomes way more important than the clunky how ready are you, really, in your own life or your business, for that truly seamless embedded future?